Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We're coming up off the morning's lows. Now we are down about 172 points on the Dow Jones Industrial Average. In the meantime, it's time for the big three stocks, three charts, three trades. Kevin Green will take us through the charts here to take us through the trades. Jessica Inskip, Director of Investor Research at stockbrokers.com. Great to see you both. Jessica, welcome back to the show. Just wanted to see how you're feeling. You know, we've had some volatility today. We sold off first thing. How are you feeling between now and the end of the year about the market?
Yeah, volatility and uncertainty go hand in hand, Nicole. I think near term, what's going to set the tone for the rest of the year is NVIDIA earnings that we have tomorrow after market close. That's going to tell us the AI narrative. And then beyond that into 2025, which is already right around the corner, I think that uncertainty might come back as well as we get into new administration, understanding fiscal policy, taking into account what actually is being implemented. The previous term with the administration, he tended to use even tariffs as bartering tools, and it's interesting to see how the market reacted. But near term, let's just focus on NVIDIA earnings and then go from there.
There are some folks who say even if the earnings disappoint, they're still, you know, big fans of the market. You're more in a wait and see mode. In the meantime, BWX is the first group you're watching here. Tell me a little bit about this.
So this is related to that AI theme. Something we've talked about a lot, Nicole, is the grid pressure. I like to say it's not the price to earnings ratio that we're looking at for overvaluation. It's the price to energy ratio. The computing power is just a byproduct that we need with this grid pressure. So BWXT is actually a exposure to small modular reactors. And we've had major investments in those small modular reactors by Google and Amazon. So I love when we go into earnings season, we look at the hyperscalers first, and then we get NVIDIA last, which is just a great way to understand the AI narrative and to round off the earnings season. So I want to see where are Google and Amazon spending money? Where are the hyperscalers spending? What are the headwinds? And of course, energy is one of them. This is something that is a merchant supplier. It's agnostic. It's definitely going to within its early stages. So I definitely have some caution there as a growth energy play, if you will, but it's got exposure to those SMRs and is one of the few public traded companies that actually have that exposure. So I think that can attract a lot of attention, especially as we focus on what's happening with the grid pressure and the whole AI narrative.
Yeah. And it's had an incredible run. I mean, it's up 66% year to date, recently hit a new high of 136, I believe. Let me take a look here. In the meantime, Kevin, take a look at the chart, please. I may be wrong on that.
Huge run up, though.
That.
Yes, it has had a huge run up, though. You're right, Nicole.
Yeah, I would say that the chart does look bullish, Nicole, obviously. I mean, we've had a really nice run here, and we kind of talk about the secular theme. And when you're looking at the one-year daily, we did actually have a nice little consolidation pattern before we actually broke out to the upside. It had a nice little run, ending the year last year, kind of topped off at around that $108 level. And then we were pretty much range-bound between $108 and at the lows sitting at around $87. Pretty wide range, but this is a high beta stock here. And you could actually see there's kind of like two different cup and handle patterns within that channel, which we then actually did see that breakout, had a little bit of a flag pattern at point B here, and then we continued to resume to the upside. Now, this does look like a little bit of a blow-off candle or blow-off top, so I would just be a little bit cautious with that, but you cannot fade a secular theme right now. An area of support, if we were to come back and kind of retest some areas, 115 is going to be the first one that I'm looking at, and then that 200-day, which is sitting at 101.60. Now, the reason why I'm getting a little cautious with this one, Nicole, is because we are having a bearish divergence with the RSI, meaning that we are making lower highs and lower lows on a relative basis. And the MACD also is kind of in a bearish formation. Now, it's still above the zero line, which is bullish, but that cross is something that I'm kind of keeping my eye out on. And if we do see the 12 and 26 cross below the zero line, we probably will see a pullback on the horizon. Overall, this is a bullish chart, just showing a little bit of signs of maybe an immediate pullback before resuming the uptrend.
Right, understood. I mean, it really is incredible. And the idea, I just like saying small modular reactors. I mean, I just think I'm in the right place with all the energy demand of the grid. I think you're right on point with that because that's what we're hearing. I mean, that is a common conversation that's being had. And, you know, we talk about electricity, we talk about nuclear energy, we talk about nat gas, et cetera, and all kinds of utilities. Final thought here, you know, when you think about this stock here that I mentioned, it hit a high of 136, it's at 127 now. You know, how high do you think these can go? I mean, are you looking for 10%, 20% in the next 6 to 12 months? I mean, what kind of parameters do you set?
So I'm not putting a price target on this one necessarily. This is something I want to add to my longer term growth oriented portfolio and then just go from there. So I want to start with my investment thesis, which is that grid pressure. And then as long as that investment thesis still is in play, I'm still hearing from the hyperscalers that they're spending money or that's still an issue. And then this is the proposed solution, then I'm absolutely going to keep that within my portfolio.
Yeah. Well, look, we have a lot of big retailers this week, right? We heard from Walmart, but, you know, Target and TJX and Ross Stores and Gap and Ross Stores, BJ, Gap. These are some of the names that we're watching closely. You have Costco in focus. Tell me a little bit about that. You like that it's had more traffic in the stores, a loyalty program looking good.
Yeah, absolutely. Costco is positioned for growth. It has a little bit of a different business model compared to those other retailers because of the subscription model, if you will, that it has with its membership model. And they're expected to gain market share, even with rising grocery prices. So I think that's going to help really attract different types of customers. Their proposition is attracting even budget conscious customers, which is something that's extremely important. They've got their signature brand, which is Kirkland, that also drives that customer loyalty. And what I found very interesting is the expanding of digital opportunities. I remember Target many years ago when they just started introducing that e-commerce and digital initiatives that bolstered their growth. And I'm seeing a similar theme here with Costco. And that's going to really help their competitive edge, especially within the grocery space. We're in this era where we want things now, and e-commerce certainly helps get things now and quicker. And so I'm very interested to see how that transforms in addition to their global sourcing model advantages, which help them position pricing power very well.
Yeah, so many pieces to this puzzle. You mentioned the Kirkland brand really has gained in popularity as well. Let's hear what Kevin has to say about the charts, please, Kevin.
Well, Nicole, when you're looking at Costco's chart, it's just had a outperformance to the upside. I think it actually has shocked the street's expectations here when you're looking at how it's been able to hold up for so long. And this stock actually does a really good job with having a stair-step approach to price appreciation, just meaning that we utilize past areas of resistance as new areas of support. At point A, we see the same type of scenario taking place. In March, we hit basically the $800 level, came back, kind of consolidated, broke through, and then now we utilize $800 as an area of support where we came back and tested. Then we broke out even more to the upside here, breaking that 875 level, and then we were in a consolidation range between $920 and $873 before trying to break out recently. Now, the breakout seems a little bit weak. You want to see some follow through, obviously, when it comes to this name, but even if you kind of go back into that consolidation range, the overall trend is still to the upside. If we break down that stair-step approach of those previous resistance areas are now going to be support areas that you want to be focused on, or even if we hit that 200-day moving average, if we do see that type of reversal to the upside, where could we see the stock go? I think $1,000 is on everybody's radar right now, and sometimes when you get those psychological levels, the market tries to just melt up there. The question is going to be, can it hold 1,000, or do we see a massive sell-off right after that? Do we see a lot of stops being triggered? The one thing I am kind of keeping my eye out on the bearish side, though, is that the momentum has started to wane here a little bit. You can see that with the RSI kind of forming this, descending wedge pattern taking place. And then the MACD also kind of on a relative basis making lower highs. So it just means that we're losing a little bit of steam. I think we need a little bit more of a new narrative. I think we do have a reverse split that's going to be happening with the stock too, if I'm not mistaken. That could be a driver. So overall bullish trend, 1,000 area of resistance. I probably wouldn't fade the move right now just based on what the structure is looking like.
Look, you're right on. Bernstein has an outperform rating. They have 1,062 as the target. Evercore has an outperform rating, also over $1,000. And Evercore now has the Costco price target at 1,075, up from 980. And there's a couple of others as well. So it shows that the $1,000 mark is definitely in the sights of folks, and we're already at records. Any final thought here about the consumer, the holidays, Jessica, spinning it forward a little?
Yeah, well, I mean, retail sales came in strong. Holiday season seems to come earlier every single year, and I'm not sure why
Yeah,
people
good
were putting
point.
Christmas trees up in my neighborhood right after Halloween, which is very, very interesting. So
Yeah,
I think it's going to
that's
be a
true.
little bit more of a pull forward, like you said, and that 1,000 level is psychological. We see that happen. So it's going to be interesting to see with Costco and retail altogether.
Yeah, without a doubt. We've gotten the latest from Disney too in the earnings, and we think about, they really gave some clarity going forward in a way that they hadn't prior, and there was some optimism that we see the chart here. I see the gap up. Tell me a little bit about the Disney story, where you think it's headed.
Yeah, nail on the head, Nicole. It is literally, the story is all about forward-looking guidance. I know they had an uptick in streaming. I personally would like to attribute that to Taylor Swift because I'm a big Taylor Swift fan, but that's where she parked her Eras tour. And therefore, if you want to watch that over and over again, that is a reason to go into that streaming service. So, but the point of bringing that up, it is targeted content that is extremely important when we're thinking about streaming and these streaming wars that we have, and this completely differentiation that is happening across the way that we consume TV. But that's also not the component of Disney that's very important. It's sports. There's entertainment operating income. They expect double-digit growth, 875 million year over year for improvement on their direct to consumer. They have said that their growth is weighted towards the first half of the year. That is the timing of specific content releases. So that's certainly going to translate over, and we're probably pulling forward earnings, hence seeing that rally right now, but we want to see that follow through. So I would watch out for any pullbacks to add into it. And then additionally, the sports segment, 13% of operated income, that growth is
Yeah.
expected to be. And so there's so many deals happening with NBA, ESPN, their flagship launch timing, lots of growth segments. So I really think the entertainment industry, the sports, and then of course that content creation lineup that they're having is going to be a pivotal moment for Disney.
Yeah, I mean, right on with the sports too. Well, look what we just saw with Jake Paul and Mike Tyson, right? You had 60 million viewers, and it's my understanding Netflix has more people subscribed to it than people who have cable. You have the Warner Brothers deal for the NBA, 11-year NBA deal extension, and so on and so forth. And you mentioned ESPN here for Disney and live sports there. Huge. Let's have Kevin take a look at the technicals, please.
Well, Nicole, I mean, you already hit it. At the end of the day, it's breaking out to the upside. I mean, we had a scenario earlier this year where we had this island pattern, this head and shoulders, where we just had price pretty much by itself before we actually saw that breakdown. And the breakdown was massive when you're looking at that selling pressure. But we ended up seeing a little bit more of a consolidation between July and, for the most part, early October, before we kind of broke out of that channel, utilized the area of resistance now as an area of support, started to grind higher, and then we had that gap above that 200-day moving average. And now we're at a scenario here where we actually did fill that gap, where we saw the initial breakdown of the stock. Now you want to see the stock actually hold up this gap and even kind of advance a little bit more to the upside here on very large volume to kind of backfill some of this gappy action that we've seen over the last couple of trading sessions. But this is, for the most part, pretty bullish. We're also going to see that 20-day moving average cross above that 200-day moving average probably by the end of November, if not early December. And that's also going to be a bullish cross here. We have RSI pretty extended to the overbought levels here. So maybe we have a little bit of a consolidation or a pullback here, maybe retest some of that gap. But overall, this trend is obviously to the upside here, Nicole. I think there was a lot of traders that not only were eyeballing this name because of that consolidation, but also looking for value plays. And sometimes when that happens, you have FOMO going into these stocks, and the technicals kind of aligned with the fundamentals that you guys talked about, and that's why we're seeing the nice little price action over the last month and a half, 2 months.
All right, Kevin Green, thank you for looking at all those charts for us. And Jessica, Inskip will give you the final word here.
It's NVIDIA earnings. We've got to focus on that. Let's get the tone for the rest of the year and then go from there.
You know, there was a time where we would get up and see what the semis were doing, right? There were days that you just looked at the semis and you knew what the market did, right? I mean, there are certain times of the market cycles that we see it's very evident. All right, we'll watch for NVIDIA too. Thank you so much, Jessica, Inskip, Kevin Green. Great to see you both. And we had BWXT, Costco, and Disney today on the Big Three.